It's a common misconception that the way to make money in real estate is to buy a property and let it appreciate over time. You'll end up saving on not having to pay rent, and instead the money you put towards the mortgage will go into the property. Except that's not really what's happening, and definitely not the way to make the most out of real estate. To start, let's first look at the historical property prices in the UK. The data and screenshots here come from the Office for National Statistics, and I'll be looking at the last 30 years, that is from May 1991 to May 2021. In May 1991, the house price index was 29. This index represents all property types, that is flats and maisonettes, detached and semi-detached houses, as well as terrace house. No, not the show on Netflix, it's a property. As you can see, the index has been growing fairly steadily since 1991 until the market crashed in 2008, where the prices fell. Since then, they have steadily recovered and gained 34% since. If you work out the appreciation rate over 30 years, house prices have risen annually by 5.2%. This isn't bad and beats savings rate in a bank, which at current rates are between 0.5% to 1%. However, this is nowhere near the rate you'd get by putting it into an index fund, such as the S&P 500, which has averaged 8.5% over the same period. And don't let the 2.5% difference fool you into thinking that's not a lot. Over 30 years, this is the difference between a 5.2% and an 8.5% growth rate. That's over 2.5 times the end value. Now look at that graph and tell me that's not massive. So we can clearly say that on average, investing in a house is not the most profitable investment on average. But note that I said on average. That's because the average value is misleading. Some properties have huge potential for gains as well as losses, and these are what experienced real estate investors hunt for. This is similar to stock picking and finding a growth stock, with huge potential, but arguably the latter may be more difficult to do and hence riskier compared to real estate. One major benefit that real estate investment has is leverage, that is, the ability to use debt to multiply your returns. This makes a huge difference to your investment returns. Let me explain with an example. So let's say a house costs £300,000 and say you're lucky enough to have that money sitting in the bank because you're just like that. Say the property appreciates by 5% annually, this means that next year the property will be worth £315,000. Now if you took the money from the bank and invested it in the property, that's the amount you get back. But let's say instead you decide to put a 10% deposit, that is £30,000, and take a mortgage on the remainder at 2% interest for 30 years. This means now you have £270,000 sitting in the bank and a £270,000 mortgage which you use to purchase the house. After 1 year, you sell the house for £315,000. You pay back the bank £275,400, that is £5,400 of interest, and you pocket the difference of £39,600. Given that you invested £30,000 as a deposit, that works out a return of 32% in 1 year. So how come the property appreciated 5% but you made a 32% gain? That's the power of leverage. By borrowing at a lower rate, you can pocket the appreciation in value of the whole property. But the story doesn't end here. In theory, with £300,000, you could do this 10 times over and end up with a net profit of £96,000 within the year. And of course, you can repeat this cycle again and again. However, as with borrowing, this is risky if you fail to meet your payments or if house prices fall. So, we've established that you can multiply your gains by using debt. But what about making more capital gains itself? Instead of buying your property in good condition, you could buy one that needs work, invest your time, effort and money to bring its current value up and sell it at an even higher profit. That's the principle of house flipping. So in the previous example, say along with the £30,000 deposit, you also put aside another £30,000 for renovation works, which raises the value of the house after 1 year to £370,000. This means that your profit after 1 year is £64,600, which from an initial £30,000 deposit works out to be a 115% return. Now this is how many finance YouTubers like Graham Stephan or Our Rich Journey did to grow their wealth, at least in part. But speaking of Graham, he's got one more trick to boost his investment, and that is house hacking. House hacking is basically where you buy a multi-unit home such as a duplex and you live in one whilst renting the other unit or units. And at the very least, it reduces your mortgage payment and may even offset it completely, meaning you get the house for free. Again, this is easier said than done because being a landlord comes with responsibilities, but it's certainly worth looking when you have such benefits. So when you stack these strategies, you can flip a house for a huge capital gain, then use leverage to amplify those gains and layer some house hacking for additional revenue. Talk about a stack there. And if you manage to do all three, that's like hitting the jackpot. And sadly, there is a but, and a big but. So before you run and try to do this, you need to realize that finding the right property isn't easy and comes at a risk. I made a video a while back on this, so do check it out here. The other thing to be aware is that getting good rates on your mortgage depends on your credit score amongst other things, so make sure you're building a good credit score. And lastly, I would say don't go into ventures you don't understand. I personally don't invest into real estate because I feel I don't truly understand the market sufficiently yet, and hence the risks are quite high. So make sure you've done your homework, or even better, you can partner with someone who has some experience in the field. In this way, you can reduce some of the risk associated with this kind of venture. So there you have it, how to grow your wealth through real estate. I hope you found this video useful, and if you did, please click on the like button and don't forget to subscribe. Thank you for watching, and I'll see you all next time.